Tanzanian coffee. We're going to then get into the second module of the day. It's going to be on a very light mode. And I also want to make it more interactive because I don't have all the answers. Probably we're just here then to also share our knowledge, our experiences on issues of debt. And today's module, we're still waiting for the projection of just a couple of slides on that, is on thematic issues on debt. As we all know, debt management is quite a broad area. And in the previous module, we saw the debt in terms of the external issues, in terms of the global architecture, right, in relation to debt. And in this module, we want to narrow it down a bit on a few thematic issues. Want to narrow it down on a few thematic issues. And the purpose of this module is just to try to break down some of the complexities that we hear about that, right? Sometimes when we look at the figures, say in World Economic Outlook or World Development Indicators, you say, oh, Ghana is heavily indebted. You know, Ghana is struggling with the debt. Zambia is struggling with the debt. But sometimes there are certain details, right, regarding this debt that I think I'll just try to have us share. And I'll be more of on the side of asking questions from you regarding that before we can then have a discussion to actually arrive at. So it's in terms of getting the details. And I think before we get the projection, I will just ask a question. When you hear in terms of that a country is indebted, those first things that come to your mind, right? The first thing that comes to your mind, what actually comes to your mind? As experts, as civil society practitioners, you know, working on issues of debt, right? When you hear of, for instance, Ghana, recently was going through the G20 Common Framework, just like Zambia, and we all heard the defaults, right? So what actually comes to our mind when we hear about this?
What comes to my mind when I hear a country is indebted is like, you know, the country is doing well. You know, there is.
It means the country has a lot of money.
Yeah, it's doing well.
Doing well?
Yeah.
Okay. Yes, let me take, and then we take the ladies, not and I'll go both sides, right? So that, okay.
Yes, mine is actually quite a bit opposed of the one that was presented by the colleague. Is that the country is highly indebted. A lot of money is leaving the country in form of debt servicing. The government is defaulting, like in providing social
outflow of financial resources.
Yeah.
Okay.
So when I hear that a country is in debt, I imagine that their taxes are really high, but also that their public services are struggling.
Okay. Struggling public services.
And high taxes.
And high taxation. Okay. Let me go this way and then get back.
Okay.
Yes, better?
Yeah, a highly indebted country also would mean that productivity is very low.
Okay.
And then outcrowding the social investment or congesting social investment.
Low productivity. Okay.
A highly indebted country means that poverty is prevalent.
Prevalence of poverty.
Poverty.
Okay. Christelle?
En fait, pour moi, c'est est-ce que ce pays est développé? Qu'est-ce qu'ils ont fait avec cette dette?
Okay.
Et savoir qu'est-ce qu'ils ont fait. Est-ce qu'ils ont développé leur pays? Est-ce qu'ils ont investi dans tout ce qui est capital social?
Okay. Okay. Thank you, John. Okay. Yeah, as Christelle said, in terms of investments, what do we borrow for? Jean-Pierre?
Oui, moi, ce que ça me pose comme question, c'est de savoir est-ce qu'il n'y a pas une planification, un tableau de bord, ou bien la question, c'est initialement, est-ce que les thèmes n'ont pas été bien... on n'a pas anticipé, pour moi, est-ce qu'on n'a pas anticipé sur un certain nombre de conditions, de critères, peut-être qui ont rattrapé par la suite? Merci.
Okay. So, like I was saying, in terms of when we hear of debt, the immediate things that come to our mind are the things that we raised. But I want us today to just take a little journey through, first, the main components of a public debt, right? When we hear of public debt, of course, we all know it's domestic and external. So maybe just for the sake of, for us to go through the room and then have an idea, do any of us understand or know the elements of external debt in terms of how countries actually incur it? Apart from just going to the IMF and saying, IMF, I want to get money, and then IMF loans you money. Or in another way, what actually goes on between the IMF and, say, a country like Benin or Cameroon going to the IMF? What actually happens? In terms of the components that make up external and domestic debt. In other words, I will use the economic word, the key instruments. How do countries borrow when they are borrowing externally? What happens? Yes?
I'm thinking about the instruments, like the main one, the bonds that are issued in the markets.
Good.
Yeah.
You heard of the bonds? Yes? That's a good one. Right on track. Yes? The silence is, it's either, there are two things. It's either, okay, I'm not communicating this properly, or probably second could be that sometimes we just assume that, okay, we know there is a loan, right? But then we don't actually know how the loan was actually incurred. It's actually where I'm trying to drive us to, right? So it is about the components of external debt. So when we talk about external debt, it is about money that the country owes a foreign entity or a creditor, right? And of course, we can have, right? That's debt owed by a country to foreign creditors, including international financial institutions, foreign governments, and private entities. And here we can actually see the differences. I don't actually want us to go into the differences because they're quite basic for us to then know the difference between domestic and foreign debt. But then what I want us to get into are the key instruments. And one of our colleagues there mentioned bonds, right, as one of the key instruments that is used, you know, to incur foreign debt or even domestic debt sometimes. But I want us to get into then the key instruments. For instance, when you hear of external debt, you are talking about, first, we hear of loans, right? A loan is an instrument. right? If we want to get the debt, say from the IMF, you need to get into a loan agreement, right, between a government or between the borrowing entity, who is now the borrower, right? You now get into a loan instrument with the creditor. That's the first key instrument. And we already heard of bonds as well, which also is a key instrument of incurring external debt. And then when we talk of loans, there are types. And I also want us to get the test if we really understand the different types as well of loans. We know the types. Anyone? Yes, Hilda?
The concessional and non-concessional loans?
We have the concessional and the non-concessional, yes. And concessional is in form of the terms, right? The concessionality could be in terms of the grant element. Normally, it is generally said that the concessionality is 25%, below 25%, right? Or no more than 25% of a grant element, right? Which means any loan that is that has a concessional element that is lower than 25% is actually a non-concessional loan, which I think is very important to then note. But stop me if at one point I say something that you think you need to be rectified. Okay? Yes? There are loans that we also call syndicated loans, which are loans involved of moving large loans that involve multiple lenders, right? For instance, you could have several private entities, putting together a loan, to then lend to a country. We call that syndicated loans. And then we also have government loans in terms of external debt, which are, of course, the bilateral ones, right? For instance, a country like Zimbabwe or a country like Zambia, then borrowing, say, from a bilateral partner like China. We all know the growth, how Chinese loans have become an important component of loans held by African countries. Then, in terms of domestic debt, how are domestic debt issued? Maybe this is something for us to also have a discussion on. How are they issued? How do governments, we know that generally speaking, we say the government went and borrowed from maybe a private bank or that incurred a loan or went to, or issued bonds, right? But what are those key instruments, the technical instruments? That's actually what I'm driving us at. How do, or which instruments do governments actually use to incur domestic debts? I see Mr. Martin, you're smiling.
Yes, the government is just like us. The government may do some procurement and then owe the people who sold the money that the government had to pay to get what the services or the goods that the government needed. That also becomes a debt.
Okay, it means the government actually using private services, right, within its national borders, which, the money that's supposed to actually pay for those services end up being part of the domestic debt. Yes, ma'am?
In Kenya, for example, I know the government advertises for people to bid for bonds, right?
Yeah.
And there's a cap of how much you can, and so for a 10 million infrastructural bond, for example.
Yeah.
And so they will owe the people.
Okay. That's very important, key instrument. Note what our colleagues just said. She said government actually issue bonds, right, domestically to incur domestic debt. Yes, better?
Yeah, similar to that in Malawi, they issue what we call treasury bills.
Treasury bills. Yes. Treasury bills. Very important. And that's part, Mr. Martin, it comes back to part of what you were saying. That's part of accessing money or a service, right? And then they are key instruments to then access those services, and that is actually what we're driving at. And some of those key instruments, like Better rightly said, are treasury bills, which are short-term debt instruments with maturities of less than a year, right? They are typically issued at a discount or to the face value and redeemed at a full value upon maturity, which means you have to actually settle that treasury bill to its full value to be able to have that debt settled. Then there are treasury notes. There are treasury notes, which are medium-term debt instruments with maturities ranging up to 10 years, right? Treasury notes, which have maturity periods going up to then 10 years. And we also have government agency bonds. That's what the colleague mentioned, right? About government bonds, which are issued by governments and sponsored by agencies. When we come to, in terms of the various public debt entities, in terms of the institutions, we are going to see that some of the government agencies that are involved. So this is to say, in terms of external and borrowing debt, that the key instruments are there. We might not treat that here exhaustively, but it is important for us as practitioners in this area to not only understand that government actually incurred a debt, but for us to know how these debts are incurred at the background in terms of the arrangements, right? And in terms of some of the commitments that governments actually own up to be able to, access financing. Yes, ma'am.
Yeah, just a question. In terms of these forms of debts, from a short-term and long-term perspective, what time frame are we looking at? So what constitutes short-term and long-term?
Good. I think that's a very important question. What constitutes long or short-term? And from my point of view, I'll take it to be something relative, right? From my view. It will be something relative depending on on different factors. Okay, the nature of the investment also counts, right? For instance, if you are building a hydroelectric power plant, okay, and you borrow money to actually finance that, the time for you to be able to recover that loan will not be the same time that you will have. For instance, if you were borrowing probably to build an infrastructure that is not of that mega size as, as a hydroelectric power plant, right? So I think issues around short-term, medium-term, right, or long-term are quite subjective in my view. But generally, we have seen that long-term has always been for a period ranging between 25 to 30 years, right? Medium-term between 10 to about 20 years, and short-term below that, right? But to me, I think it is also relative. It's quite subjective. Yeah, Mr. Martin.
I think there's a simple way to say that when you count in years, just years, below 10, then you are short. When you start counting in decades, you become medium. When so far as you are still under 2. When you get up, counting in decades, many decades becomes long term. So as Theo is saying, it is very relative, but we just give those references for people to have an idea. Like some people will tell you, if it is less than 5 years, then it is short. If it is more, and not more than 10, it becomes medium. And beyond 10, that's long term. So that's the way we try to put it in picture. But actually, it is very relative. Short for me could be more than 10, depending on how I manage my system. And for another person, that would be medium. Thank you.
Okay, thank you, Mr. Martin. Maybe I just want to go very quickly through the floor to see, yeah?
Just a question, Theo, and thank you so much for unpacking that for us. Just back to the question around, and this is more like an economics 101 question for the economists in the room. You know how government, even investment, people are normally like, oh, invest in bonds, invest in bills, the government will never default. And so a lot of people go ahead and do that. But my question was around, okay, so they never default and they always pay us back our interest and not within the time of maturity. But of course, they're defaulting in the foreign debt. And I also understand, of course, the dynamics of that one is, of course, in foreign currency. So, of course, I was just trying to understand, is the reason why they don't default when the domestic debt is because of the currency is the same? And if not, what are the differences as to why they don't default locally, but we're still seeing, of course, we owe money when it comes to foreign debt? And what are the dynamics there that contribute to each other?
Okay. Thank you so much for that very important question. But maybe first, before we get deeper into that question, they actually do default, right? Governments actually do default on domestic debt sometimes, because that's actually what happened in Ghana. If you followed what happened in Ghana, and this is also an issue of liquidity and a solvency issue, the challenge, faced by governments, right? So they do default, but then it is very important and critical for governments, because of course the domestic debt it's owed in local currency, which means you don't need to earn foreign currency to service the debt. But there is a challenge there, right, where governments are owing the private sector, and then it's going to create issues of challenges of credit for the private sector, which leads to economic instability, right? Because when the banks are there, the investors are there, they don't have the debt settled from the government, and to inject the money back into the economy, it becomes a challenge, right? It poses challenges, in terms of, the domestic economy and financial entities, and of course, providing credit. So it's always very important that in as much as domestic debt is held in local currency, there are challenges associated to it in terms of access to domestic credit and, of course, economic stability for the country. Yes?
Nigeria just got $2.25 billion from International Development Association, World Bank. And our Minister of Finance was rejoicing that it's just like a free money, that it has a moratorium of 10 years and a maturity of about 50 years to pay back. So what I'm asking, this IMF loan now that we have taken, the way he was painting it, does it have consequences? Because he was rejoicing, excited that it's like free money. Is it actually free money?
I think the answer is quite obvious. It's a no, it's not free money, although it's cheaper money, because IDA is actually concessional lending, right? So we will get to that, the concessional lending arm of the World Bank. So it's not free money, but it's cheaper money compared to bonds, right? Because it has a significant grant element in terms of accessing loans through the IDA. I don't know if there are any other comments around the room on, maybe general comments, or also maybe adding to some of, to the answers that have been provided for issues around domestic debt and IDA replenishment. Yes?
I don't, you have a blind side, comrade.
Sorry?
You have a blind side.
I have a blind side?
Yes.
Oh, sorry, comrade.
I've been trying.
No, sorry, comrade.
Yeah, no, that's
you
fine.
have the floor.
Yeah,
Sorry.
Yeah, all right, that's fine. So, I think for me, it would be interesting to hear from you and the unpacking the intersectionalities, because we're talking about public debt, and you gave a bit of hint about corporate financing, corporate debt, but also its implication also in terms of personal or at family level. This conversation we are having, how does it relate to us?
Yeah, I think you are right about issues around the intersectionalities and around how public debt actually then actually gets down, in terms of how it affects, households and individuals like you and I. And of course, if we want to look at this Mukasiri, which actually also was not part of this presentation, right? If we want to look at it in terms of the global debt, the debt ecosystems, in terms of issues around domestic resource mobilization, that actually pushes governments, right? Weak domestic resource mobilization or low domestic resource mobilization that actually pushes governments towards reaching out their hands, right? To then borrow, to be able to finance development or to meet their development needs, right? If we go by that, then we'll see that it's one key element. The other key elements are also issues around bringing in issues of international public and private finance. We have issues of aid. We have public-private partnerships, which are also key elements, right, within that ecosystem that determines how much or the need or the degree of need for governments to actually have the desire or have the tendency to borrow, right? And then, in terms of how we actually use these resources, are also other key issues within that ecosystem that we can delve into. And of course, when governments end up accessing loans from all these sources, and then they reach the challenge of how that loan was actually invested in terms of what it generates to support debt service, right? What it generates to support debt service will actually determine how much of it, how much of that pinch you and I or household will get to feel. Where there are opportunities where have been, in terms of capital investments, with borrowed money, these capital investments will actually provide governments with the means to be able to get the resources that they need to finance, such a loan or to service such a loan. But in instances, as we have seen in many African countries of late, right, when governments are unable to then mobilize those resources or have those capital projects that can help them service loans, we now start turning, towards austerity measures, right? We now start going towards austerity measures, which means government will have to restructure the economy, probably fuel subsidies like we have had in many African countries, governments taking off fuel subsidies, and this has an implication, right? Because fuel goes into everything. Children go to school by fuel. The food that we eat comes from, from the farms, with fuel involved and all of this. So they get to impinge on how you and I, we get to meet our needs. We get to impinge on how the level of societal welfare, right? How comfortable you and I can live. will actually meet our needs without actually going through the stress will then depend on the investments that are made from resources mobilized through those diverse sources that I highlighted just a while ago. So maybe we will come to that in course of the week, but I hope it addressed your concern. Yeah.
Yeah, so I think there's something that's confusing me a bit in terms of getting these loans for development purposes. So if the idea of getting a loan for development purpose, for example, a road that's not going to gain any profit, what is the expectation in terms of paying back that loan plus interest? Doesn't it make more sense for them to just give us the money and then we build these roads? Because the road is not going to give us any profit or any money to then pay back. So what's the purpose of like the interest when it comes to development loans or debts?
The purpose has always been to develop, but why we are here today is because we do borrow. In every instance, we borrow, but at the end of the day, we struggle to pay. And sometimes we do not only struggle to pay, but we do not even have the roads available, right? I'm sure that is why we are here today, and that's why we'll also come back to issue of accountability, transparency, issues around debt management. So it's a concern. It's a very genuine one and a very legitimate one. Why do we need to even borrow when we are not able to pay? Why do we need to borrow when we will build or we will end up not actually building the roads or hospitals or hydroelectric powers? We end up holding a very big loan on the one hand to pass on to the future generations, and on the other hand, we are unable to pay the loan, and the infrastructure that we borrowed for is actually not available or is not actually operational to full capacity to help us actually service the loan. So I'm sure that is why we are here today, and that is the main concern that we have in this issue of advocacy on public debt management. Yes, Mukesiri again?
Yeah, can I add something quickly on that? So you look at the infrastructure needs for most of African countries framed from a capitalist position. Your mining sector or the extractive sector highly energy dependent. So you borrow to subsidize the investments in the mining sector. When you talk about infrastructure, your roads, your dams or what, you are just borrowing to subsidize, to lower the cost of doing business for the very same sector that is extractive. So it's also understanding that ecosystem. That's why I was saying, as we go along, I know you've done a pretty good job from an introductive position because of the limited scope of this presentation, but the intersectionalities of where public finance, corporate finance, personal finance, how they are all rigged to ensure that in the end, corporate finance takes no risks. It is public finance which is meant to de-risk. And in the end, it means that as citizens, we are the one who then ultimately absorb the shock, whatever way you look at it. Just as I conclude, you look at the financial statements of most of the companies. It could be like your in the mobiles, those that communication companies and so forth. Their balance sheet, they're highly leveraged. They borrow money, and in the services that we are consuming, we are paying that interest. So it's a vicious cycle.
Yeah. Okay. Thank you for breaking that down, Mukesiri, and I'll give a hand to Ndongo, and then
Merci Théo. Je pense que la problématique que soulève notre collègue, en fait, c'est ce qu'on appelle en économie la question de l'éviction du secteur privé, en fait. C'est-à-dire que tout à l'heure, on l'a dit, quand l'État emprunte, l'État fait rarement des défauts de paiement, et du coup, les gens préfèrent investir dans les obligations émises par l'État que de donner l'argent à du privé. Et souvent, c'est justement cet arbitrage qu'il faut garder en repère pour éviter que justement l'endettement domestique ne crée pas justement cette question d'éviction du privé. C'est-à-dire que le fait que justement l'argent va vers l'État et non pas vers le secteur privé. L'autre question que ma collègue a soulevée, c'est un peu la question de la rentabilité des fonds, de l'emprunt en fait. Souvent, en fait, tous les investissements sont rentables. Quand on parle de route, la construction d'une route est rentable. Même quand on investit en l'éducation, c'est rentable. Maintenant, l'enjeu, c'est de voir comment allier un peu la question de long terme ou de court terme justement des emprunts par rapport au choix justement sur les investissements. Si on fait un emprunt qui finance l'éducation ou bien une route ou bien une infrastructure dont la rentabilité c'est dans 10 ans, 15 ans et qu'on doit rembourser dans le court terme, ça c'est pas un choix judiciaire. L'idéal serait que quand on fait un emprunt, que ce soit un emprunt à long terme qui puisse également financer des projets dont la rentabilité également ce sera dans le long terme en fait. Voilà un peu.
Thank you, Ndongo, for breaking it further down from what Mukasiri said, and a very good answer to your question in terms of why we borrowing for capital projects. You know, I mean, it's a further breakdown, a further explanation to what I attempted to, to the answer that I attempted to give to your question, right? Mr. Martin.
Thank you very much, Theo. Just to complement what has just been said, I think this comes to debt decision making, and it relates to what we heard from Jason this morning when he said, when we say debt, it's not just about debt, about borrowing for borrowing. This is all about development. Develop meaning that we as a country or a continent or a household, we try to do things that make our life easy. And to do that, you need resources. You generate those resources domestically, and you end up finding that the amount that you generate domestically is not enough for you to do all what you want to do. That's where you go and take the decision of going out to get for the complement in terms of borrowing. It's about decision making. Now, if at that point your decision is made in a wrong way without taking into account the real expectations that you have in terms of when you borrow today, it's because you expect to have resources tomorrow to pay back. And you think that it will cover all the needs. You also think that even if you pay interest, that will be covered by the coming resources that you are going to mobilize domestically. So it's about how you take that decision. If you only take it in terms of you misassess your capacity of mobilizing domestic resources, you will end up getting into trouble, and some of the countries that are in debt distress today.
Thank you, Mr. Martin. That is on debt governance, which is, I think, is one of the last slides that we're going to see. And I'm just going to open up the slide when we get to that point for us to then also just interpret, to give our own ideas on what we get out of that of that slide, right? So let's move forward. Okay, in terms of course, for us to know, sometimes we only hear of governments, how governments have borrowed, but we also do not know how this is partitioned in terms of which institutions are involved, which structures are involved, right? The central government, of course, when you look at the public sector, it has two sides, right? Where we have the general government, the central government, those are in terms of decentralized structures that also have the ability or the mandate. I mean, they can access credit on their own based on their existing assets, right? You have the local government. And then you have public corporations that can also incur liabilities and, of course, are often guaranteed by the central governments. And here we have public non-financial corporations, the public financial corporations like the central bank, the public deposit-taking corporations, except the central bank and other financial corporations. Okay, so the public corporations here, in some countries they call it, those non-financial one, public establishments, right? I don't know how it is actually structured in our own various experiences, but I think I just also then just want to hear from us if this actually suits or actually matches what we or our own realities, like in our own various countries, if this is how it is also structured. I don't know if it matches our own realities in terms of how the institutions are structured, who borrows, because actually here, this is actually whom we call the government, right? That's actually the government. Yes, Hilda?
For the case of Uganda, when it comes to the structure of public debt, what they call public debt is just the external debt and the domestic. Things like areas, like he mentioned, and the contingent liabilities are not part of the definition of public debt. So areas like local governments are not in the structure of who is entitled in acquiring public debt. So the structure in Uganda would be where we have the public sector, would have central government that is represented by the Ministry of Finance. Then we have Parliament, the Parliament of Uganda, that is in charge of approval. When does Bank of Uganda come in? I'm forgetting, but usually Ministry of Finance and Bank of Uganda, but it is the mandate of the Minister of Finance to actually borrow. But they have to go through the central bank on issues of macroeconomic stability, like to advise whether the loan will be feasible. Yes. Then on the side of public operations, how it comes in, that is termed under what they call the other financial liabilities, where we have the public operations guaranteeing, like the central government guarantees certain entities. Then also under public operations, we have what we call the state-owned enterprise debt. Yes, so I'm not so sure how that is a card Madam Jen could come in. Yes, but local governments don't have the mandate to borrow. Yeah, they don't. Maybe they could commit government on the side of what we call the domestic areas when they acquire services from the private sector, then and they don't pay within a period of 1 year. Yeah.
Okay, thank you. I think that's all too complex, right? Because sometimes we just narrow this down to saying that it's the government of a particular country or in the World Bank, right? But then behind this, for us to also be able to then do our work as civil society, we need to understand these layers of arrangement depending on the various jurisdictions as well. Because in some jurisdictions, the local government can access the markets, right? And borrow actually from the market, and of course, end up being guaranteed by the central government, as well as the public corporations. Sometimes they take up the debt, and that's why when you open the IMF or the World Bank database, you see what we call public and publicly guaranteed debts, right? Yeah, Jason Yue.
I was just interested because, just understanding different countries and how they have different governance structures, and at which point do they allow, particularly at local government level, for them to borrow. And I don't know if, other than Uganda, if there's any other countries in the room where your local government is allowed to borrow on behalf, and the Treasury guarantees that. It would be interesting to hear, because I think in the case of Kenya, there was a discussion about the counties being allowed to borrow, but I'm not sure how far that went, and maybe a colleague from TISA can help us understand a little bit more. But if there's any other country where that happens, where you have a decentralized system, but that decentralized administration is allowed to borrow. What I did want to ask is, where do you put state parastatals in your, is that under public corporations?
Parastatals.
Yeah,
it's
it's
under
under public.
corporations.
Okay.
And I think we also then have all these different nomenclature around it. They are actually public corporations, and you also mentioned about state-owned enterprises, which I think they also fall under this structure. Some of them that are financial, some are non-financial, some of them that are actually income generating, some of them are like private business entities, and some of them that are just actually there to render public service without actually also looking for profits, like normal business corporation will do. I think the arrangements also vary. Maybe Mr. Martin, you have something to say before we go to this other side? Yeah.
Yes, thank you, Tode. Just to answer the question that Jason just asked about any country having a system which is, actually, in the case of Cameroon now, the decentralization process is moving toward a system where a local government will be able to directly borrow. It is not yet the case, but they are now studying the best way to put it, and probably the next financial law might bring that up, because local governments are pushing as part of completing the decentralization process to be able to borrow directly. But now, to make sure that that does not impede the debt management system, the government is studying the best way to allow local government go out and borrow. So it's something which is being studied.
Okay, thank you for that detail. Okay.
Yes, I just wanted to make two quick comments. Like, first on the local government, I think it's the same, like in terms of they being able to contact that, but on their own books, not implicating the central government or the general debt that we have. The second is related to how this issue of debt, in terms of just trying to find the right words to put it, but it was related to, I'm having a blank. I'm having a blank.
But I know you'll come back to that. And
yeah.
In terms of actually local governments borrowing without actually putting it on the central government.
It was related to the non-parastatals.
Okay.
What happens is that we have a divergence in terms
Which
of
country is that?
Mozambique.
Okay.
We have a divergence. What is the structure? What the structure formally is, and what happens in practice. You'll see that in the reports. You'll see that our government will ignore all its contingent loans from their reports. But when the IMF, for example, or the central bank do the reports, they will put it there, and the ratios, for example, are completely different. The interpretation for the sustainability of that, it's all different. So to say that what happens in the practice and the formal system is different. Yeah.
Okay, thank you. Then after that, we'll take Ndongo.
Okay, I'm wondering if this is the structure that then we can include Mukasiri's point of household debt. If this particular public debt structure is the one where you can see how the money moves from public sector to then affect
I will ask Mukasiri to then comment on that. Because, well, we are dealing here with, of course, what Mukasiri evoked is very important, because at the end of the day, when governments have borrowed, the burden actually at the end of the day falls on the citizens. It's not the governments or the individuals in government that are going to pay. It's actually the citizens, right, who are actually holding the debt. They are actually the ones owing. When we talk of government owing, it's actually the citizens, you know, who end up actually servicing the debt, right? Mukasiri, also from the comments that you made earlier, because the burden actually falls back on the citizens. in terms of the taxation, in terms of the services, right? It falls back on the citizens, yeah.
En fait, je voulais juste soulever la question de la dette qui est garantie par l'État. Parce que quand on parle de dette, il y a la dette de l'État central, dont le paiement est assuré dans le budget de l'État. Mais également, il y a la dette garantie par l'État, c'est-à-dire que ce sont les institutions publiques de l'État qui font des emprunts et que l'État les garantit. Et souvent également, cette dette n'est pas souvent comptabilisée dans la dette centrale. Pour le cas du Sénégal, il y a quelques années, la ville de Dakar avait voulu lever des obligations au niveau du marché financier de l'UEMOA. Et il fallait avoir l'autorisation de l'État pour justement pouvoir lever ces fonds-là. Mais il y avait des enjeux politiques parce qu'en ce moment-là, le maire qui gouvernait la ville de Dakar n'était pas du parti au pouvoir. Et du coup, l'État avait bloqué justement cette autorisation pour lever des fonds au niveau du marché financier. Donc, c'est un peu la question de la dette garantie par l'État, dont les structures publiques ont besoin de l'autorisation de l'État pour pouvoir lever ces fonds également au niveau des marchés financiers et autres.
Okay, thank you. Thank you for that, Dr. Ndongo. And I think this all brings us back to the ability of these various entities to issue their own guarantees, right? I think that's also what determines on whether they can borrow directly. Like Mr. Martin was saying, what is being developed in Cameroon, definitely he has to take into account on the ability of the local governments, so all some of these decentralized entities, to issue their own guarantees, which means they have the credibility to borrow, right, on their own name. Otherwise, it has to go back then to the guarantee. I mean, to the central government guaranteeing the debt.
Actually, Theo, there's no way around, because when you look at it from the other side, I mean, those who lend, they will very difficultly accept to lend to people who do not have the state guarantee. So meaning that whatever the case, even if you can borrow directly, if while you are a local government, you will necessarily need to be covered by your government. Because out there, be it multilateral or bilateral lenders, they will always want your government to guarantee your loan.
Okay. Yes, Mugasiri?
Yeah, I just want to throw in something that has always been troubling me in many conversations. Looking at resource-backed loans in the context of, for instance, your state-owned enterprises, it's because there is a state guarantee to it. But we know for a fact that most investors in the extractive sector, they also use our resources to borrow from the capital market, but we cannot classify them as resource-backed loans. So in this conversation, I also want us also to be disruptive in what we say is public debt. Because if a company says we have because English is not our first language, they say we have discovered resources. They go and borrow from Australia, Canada, and everything, and that's not public debt.
It means those who come, they discover our resources, there is some confidence that is given these corporations, right, even over our own public entities. Is that what you're driving at, right? Because they have a certain market confidence.
Not just a matter of market confidence, but it's about the narrative, the limitations of what's called public debt. Because if people's resources are being used by corporates to borrow money, there's a public asset.
Okay.
It's a public asset that has been used to guarantee the private sector to make money. So we should also be classifying them, in my view, as public, the guaranteed debts for
Okay.
those corporates to look at Anglo-American, to look at Glencore, to look at so that you guys, you have got also public guaranteed what debt in terms of how you have raised your capital.
Okay, thank you. Is that how it works in? Okay, I think you said it's a narrative. It's about the narrative, right? Because typically, I don't know, Joab, is that how it works? Like, can Anglo-American go incur a debt because it wants to do extraction, and then it ends up actually being part of public debt?
No, I think it also speaks to, I mean, the kind of contracts that are signed, our government signed, like the part of the government guarantees whenever you're doing all these mega projects or even extractive projects, that then constitutes the government's share in that kind of investment. And you know, the government, and it was said before, that the government takes up most of the risks.
Okay.
So it's always, you socialize the risks to the public, and then you privatize profits.
Okay.
So in the case of private companies, that's what happens most of the time.
Okay.
Yeah, I'm looking, for example, I mean, like infrastructure projects, you know, that are even built on using the PPPs model. For instance, you know, the government takes on most of the risks. For example, when you're dispossessing people land and you have to compensate them, it's a government that takes up those costs, and it's usually a mega costs. And then when it comes to recovering the costs, it's always the investor that's talked about. It's always the investor that is running that particular project, but the government expenses are not counted as part of the debt. Yeah. When I look at the Kenya Expressway and how much we're saying it cost to build that expressway, it's always the cost that the investor put in, not the cost that the government put in. You know.
Yeah. Okay. Thank you. These nuances are coming out at Mukasiri thanks to also your intervention. Jason, it's like you were going to say something.
Yeah, I mean, I want to build up. I want to build up on what Mukasiri is saying, and also hazard a response to your question about whether the private sector can go and borrow. It does. I mean, if you look at hedge funds, equity funds, and what investment banks do, that's what they do. That's exactly their business. So they identify a project. It could be in the natural resource sector or mineral resource sector. It could be infrastructure projects. What they do is they cost that finance because they know how much that project is likely to cost. They attach a price to it, and then what they do is they calculate a return, a potential return, and then they sell that debt to shareholders as a form of equity, with a guarantee or with a promise that when this project is complete, that the borrower is going to pay us back our capital, so the money, the initial money that they've put in, plus a small margin, which is the interest. So it's possible for them to do that because that's their business. That's how they make their money. I think what's important for us to consider in this context is the ethics around our governments, in the full knowledge of knowing that this is happening, that they still sign up to go and take these types of loans. But increasingly, you're hearing people talk about pension funds. Actually, and that didn't come up in the question that you asked us. You know, governments, hedge funds and investment banks are using pension funds from our own countries and from elsewhere to leverage and create debt out of that, which is putting a huge risk on what will happen in terms of the social investments that people have made, through their own contribution. So I do think that there's also an ethical issue on how then our governments are looking at commercial loans and how then corporate businesses, particularly hedge funds, design their instruments and bring them to our governments. Because when you come with a pension fund from Europe or from the US, that's the reason why it's so expensive, because they don't want, they know that they're dealing with people's savings, and they need to cost it in a particular way at that margin. So I do think that there is something for us to be very cognizant about in understanding what Mukasiri is saying in terms of corporate finance and corporate debt in being used as a form of loan, particularly in the resource sector. Okay. Thanks.
Thank you, Jason. You see, these are the complexities of when we just hear of owing, right? There's a lot of background work, right? When you just hear of maybe saying our debt is 1.5 trillion, 1.5 trillion amount of this currency, right? It means a lot when it comes to issues of the instruments, the mechanisms for incurring such loans, and of course, in terms of the two general instruments here are always these loans and the securities. Of course, the securities in terms of the in terms of the bonds and the treasury bills and domestic and external debt is all structured after this, after this instrument. But then the concern, which I think was already raised, it was going to be one of the things that I was going to raise, is for us to also have a reflection on which debt we actually think is preferable for a country. Should this be domestic or it should be external? I think these are also some of the things that government have to consider, right? We need to factor in, like, where is it, or where will you get the most valuable loan, or the cheapest, or the most affordable debt? Should it be external or domestic debt? I think this is also something for us then just to reflect a bit on before we move on in terms of the pros and the cons of each of the forms of debt. Yeah. Jane, maybe Jane? Okay. Let's do women, men.
Okay. Maybe for the pros of domestic debt, it wouldn't expose the country to the foreign exchange risk. Yeah? But then, on the other hand, if government really leverages on a domestic debt, it actually, first of all, it crowds out the private sector because the banks, because people would prefer to lend government domestically than to lend an individual like Hilda. So there should be a balance. On the side of external debt, of course, there is the foreign exchange risk, and then that whole bit of sovereignty, like when it comes to borrowing, when I borrow from a given government, that will really extend their conditionalities on my nation, and it poses questions of whether I'm a sovereign state or not. But also the whole bit of, like, I think it was Nicole that mentioned the issue of a human rights approach. If we factor it to both of the two components of public debt, which one would hurt the ordinary citizen the more? I'll give an example. While it may look like external debt is more on the foreign exchange risk, I've seen Uganda's debt payment in the recent times, particularly this financial year, going up because of the volatility of the U.S. currency. Yes, like when the interest rates in the U.S. change, it really affects, like, what comprises of our debt, the variability, the whole issue around the interest rates and the variable rate. Yes. So when you look at external debt, increasingly when you see the changes in patterns, more lenders externally are opting to lend us on variable terms. So the interest rate issue can also affect our external debt strongly. Yeah, I'm just thinking around those. So I feel like it should be a balance between the two. But now who determines the point at which it should be more domestic or external? So I don't know if, maybe we can sit and see if we can get better models to advise our national governments.
Okay.
Yeah.
I just wanted to.
Okay.
Just one a trend which I have observed when we talk about domestic. What do we really mean? Because even domestic, they are like the bonds, the treasury bills, but then they also increasingly, Uganda is borrowing from commercial banks, like Standard Chartered Bank. Of course, it's a business and the terms are really not really good. So again, when we are talking about domestic, we need also to break it down what kind of domestic loans from the domestic are we talking about?
Again, adding to those complex, yeah.
Okay, on foreign loan, like in my country, the law is clear. It favors domestic borrowing at 60% and external borrowing at 40%. But then, if you look at the external borrowing, because of the long maturity rate time, tenure, loan tenure, you see that it is more preferable to borrow from at concessional rate, especially from multilateral development banks. Just like as we borrowed this $2.25 billion from IDA. So that is that, and that is why our country has been, borrowing, keep on borrowing, at the advice of World Bank and IMF. But then when you look at the other side, the cons, you will see that the currency volatilities makes foreign borrowing very expensive. For instance, as at 2015, our exchange rate was around between 400 naira to $1. But now we are talking of 1,500 to $1. So you see that repaying such loans will be very, very expensive for the country, despite the long tenure of the loan. And the moratorium that they give sometimes is very long, and then you think that is free money. But on the domestic loans, it is also good for to borrow from domestically. But then, just as we have discussed here, because the currency, you borrow in at the local currency. So irrespective of how long the loan lasts, because of your currency still your currency, it may not affect, even though it may affect it, it may not affect it like external currency fluctuations. But then the repayment of government, of the central government, to local domestic lenders can be a problem, just as we have discussed before. Because if they don't repay in time, it may affect investments by these creditors.
Thank you. Yes, drop, Mr. Martin, then drop.
Thank you very much, Theo. I think from my side, it's not really about choosing one or another. The real thing is the terms of borrowing. Because if you bring it back to what Mukasiri was saying, all depends on the kind of terms that you accept. If the loan terms are not good for you, then you get into trouble. We're talking about Anglo-American here. There's nothing Anglo-American can do if we've not agreed on a contract with Anglo-American whereby the government is covering them on a way or another before they are able to go out in capital market to fetch for money. So all depends on the terms. We should be looking at the terms of borrowing or the terms of lending. That's where we should be watchful to make sure that we accept only good terms.
Yeah. Thank you, Mr. Martin. I think the terms, very important, drop.
No, I just want to tie this to the previous conversation, and there is the discussion around the volatility of the foreign exchange, and looking at the session in the morning, like in the first place, you ask yourself when you're talking about the volatility of your forex, why is that the case? What are the structural issues that actually lead into that, the weakening of our own currencies? It's the trade deficits that we have. It's the low industrialization. We have to import all the energies we consume. We have to import the food. It's FDB recently projected that the next 2 years, our food import bill, just for rice and wheat only, will be about $110 billion. And that's almost like 3 times or 4 times what was like 10 years ago. So all that, then because of that, food deficits, energy deficits, then lead us into borrowing. It weakens our currencies, and then the cycle continues. I just want to link that to what is happening currently in the energy space, and with the discussion on foreign exchange, the volatility of foreign exchange, because some people are now taking advantage of that to say this is a problem why investors are not investing in developing countries. It's because of the volatility of forex. So you won't be able to get your money unless you hedge it high at a very high interest rate. And so I'm sure most of us know the Bridgetown Initiative, or have heard about the Bridgetown Initiative. The architect of the Bridgetown Initiative is now plotting something else around the foreign exchange. And is in his new role at the Inter-American Development Bank, he's coming up with a proposal that he's presenting to the G20 on how to deal with the forex problem in Africa, and to attract investors, and pushing the narrative that let's leave climate mitigation work to the private sector. And this is how we manage that. We provide like long-term hedging as development banks to the private sector to stabilize foreign exchange. And his argument is, when you invest in a power utility, for example, in a power plant as a private, you'll earn from the utilities you pay, your power bills, and that's paid in local currency. And I was just asking myself, when he was making that presentation, a question he didn't answer, the implication of that on driving national debt, because he's saying that let governments forget about the public utilities, the power, let it be run by the private sector, and the risk of that because of how these deals and contracts are entered into. And then the other thing I wanted to ask, you, if you, in your research and in your work, you've also tried to look at the role of the national stock markets in these whole conversations.
Not yet. We haven't got into that already, and I think also that then opens up the space for us to want to consider that. And I take it from the point that you made. Besides, it's not about domestic or external debt, but actually how we then strengthen our currencies through, industrialization, value addition, so that we can now get the strong currencies. We have the strong currencies. Of course, then we cannot borrow from wherever we like, and then earning the foreign currency doesn't become a challenge again.
Yeah, I'm always passionate about my stomach because I need to eat. But this question, it's part of the SDGs, SDG 2, ending hunger.
Yeah.
But is there, for those of us in this room, because we're talking about food insecurity, is there any country where a government has written off loans to corn farmers, sorghum, the food we consume.
Yeah.
You know, it's a question I've been asking myself. Why is it that the loans that are written off are always loans that belong to cash crop farmers, those meant for exports?
Question for Mr. Martin, you want to take this?
Yes, answer. No, look, my brother, it's because farmers and other people, they never receive any loan. That's the issue. Because they write off where they've given, whereas farmers and other people do not have access. And this is a huge problem in Africa. That is, farmers who are at the basis of our economies do not access the financial market to get the resources that they need for their business. And this is an issue.
Well, that is very, very risky. I remember I just use my country as a case study. The CBN issued loans to farmers, so many of them, and under the Anchor Borrowers program. It was also, there was an element of World Bank aid in it. But unfortunately, the loans, it was meant for farmers to cultivate during the last administration, to cultivate rice, enough to make Nigeria a rice-producing nation, to stop importation of rice. But at the end of the day, due to insecurity in most parts of the north, where farmers who planted rice and other cereals could not access their farms to harvest those crops. At the end of the day, most farmers were not able to repay those loans. So as we are now, those loans have come to, what do they call it in bad debts or something like that. They have not been able to repay. So it's gone. That is what is making giving loans, and that is why giving loans to farmers sometimes is risky. It could be weather, and it could be insecurity, just as we have seen in our country.
Okay, I think Mr. Martin, you said it's not something that's practical, but he's just giving us an example from Nigeria.
Yeah.
But I think this also were loans incurred by the state, right? This guaranteed, right? Good. Okay, guaranteed, and then now lent to farmers. Okay.
In fact, that was one of the mistakes of the previous CBN governor, because what he used mainly was ways and means to support most of them, and they printed money recklessly, and that contributed to our economy's problem.
Okay, I'm aware that time is it's moving quite fast. Mukasiri, you have something to just chip in, and let's move faster also before we go for lunch.
Yeah, I'm just sharing this latest developments. We know Huawei, China, one of the biggest companies when it comes to dominating the global technology. So now they're the biggest importer of beef and wine from Argentina. Barter trade. The US is an ease with that. So I'm just trying to say, as we talk, there are some things that make sense, that does not make sense because of the manner we are wired. But these are the things that really matter. Why should we pay in US dollars? We should also say, no, guys, we should be clear, we value our... But some of the problems come because we overcomplicate things. We have seen China and Huawei now. In China right now, Huawei is selling at wholesale price beef and wine. And imagine, what's the connection between the phone, wine, and the beef? What's the connection between cobalt and DRC and some of the technologies that we want that country to develop? So it's simple as all that. Forget about the investment, taxes, whatever. We want something that is tangible out of the tangible good that we are giving you.
Yeah. Thank you, Mukasiri. I think I pick one thing from there. When you asked why should we pay in US dollars, and of course it comes back to something that Job also mentioned. on value addition, right? You know, to be able to industrialize so that we can also have something tangible to be able to trade, exchange, and have a currency. But the question of why should we actually just pay in US dollars is another debate that we can also get into and see how do we then challenge the fact that we don't want to pay in US dollars. I think it's another whole conversation, you know, on its own. But I think we need to move a little bit faster. We just wanted to then see a lot of the debt that we hold from multilateral institutions, and of course there are facilities related to how these debts are incurred. But just to tell you, there's a lot of background material on this that will be shared, you know, will be part of the resources that are supposed to come with this, where we will be able to see some of the IMF lending instruments and facilities, right? We heard of the securities and the loans. You will see the various instruments that the IMF actually uses to be able to provide these loans. For instance, you will hear of standby arrangements, extended fund facility, you know, a poverty reduction and growth trust. We'll see all of this so that we should, and part of our work, right, be able to understand that IMF loans also has a lot of background work. You know, when we hear at times you just borrow from the IMF, they are key instruments, you know, that governments actually use to be able to access these loans, which I think is part of what this course wanted to share with us. But the course material will be shared with all of us as part of the resources for this course. And of course, the World Bank has its own lending instruments and facilities as well. And chief of them, one of the chief instruments is what our colleague from Nigeria mentioned, the IDA. The IDA is also one of those key facilities that the World Bank use to then lend money to countries. Let's move faster, but there was supposed to be something on debt governance. On debt governance, and of course on John. Okay. Thank you. Oh, that's the last slide. No, go back. Yeah. Yes, on debt governance. We have resources to share on this. Public debt management objectives, maybe just a quick reflection for us because you have some notes on this as well. When you hear of governments actually managing public debt, what does it entail? What is it? What is the key task and the key objectives? What is it that they actually want to achieve from it? I think that is actually what this slide wants to address. And then in terms of the public debt governance laws, we need to know that there is a legal foundation to debt, right? Without that legal foundation, we might not be discussing this because people may just decide to say, after all, this is not binding, right? I can just then move away and say, I'm not owing you any money, right? So I think that is also at the core of, oh, John, this keeps happening. So let's just have a very, very quick one on this, on public debt management objectives. When you hear of all of us, we have public debt management offices, ministries of finance in our various countries and various institutions that are actually charged with, you know, helping our governments manage their debt. When you hear of public debt management, what comes to your mind, like the key objectives involved? Oh, sorry. Want me to take it all over? Okay. Hilda, I'll come to Hilda. Let's get a hand that has not spoken. Maybe I want to point someone else to say something. Do you have something to say, ma'am? Okay.
When I think of public debt management, well, I'm thinking about utilization, I'm thinking about ensuring that these are managed for the purpose that they were mobilized for.
Okay, ensuring that the debts actually are channeled to the investment for which they were intended, right? Very correct. I'll be taking hands that have not spoken. Yeah? Yep.
Yeah, so it starts from acquisition, deciding on what debt, is it external, is it domestic, for what use, then terms, we were talking about the terms, then utilization, and then the allocation, like to where and all that.
Okay, I'll come to you and then you.
All right. Okay, so in addition to what she has said, and also just speaking from the context of Zambia, for example, we have the Public Debt Management Act of 2022. So the main objective really is to constrain the government, right? Because we want to regulate how they are contracting debt. So for example, before government can contract some debt, it has to go through parliament. So I think that process is earmarked to just be able to like regulate the contraction of debt. But of course, it's subject to discussion whether, because what has been happening, for example, in the context of Zambia, we have government controlling the majority in parliament. So they will more or less pass, or maybe the proposals that government would have with regards to public debt. But really, it's just to constrain the appetite and to make sure that it's regulated.
Okay, thank you so much. Very important contribution, yeah.
Yes, thank you. When I think of public debt management, I would think of a government's financing needs and its obligations that are met at the lowest possible cost.
Lowest possible cost. I think that is a very important one. Lowest possible cost. But there's another question behind that. If the lowest cost is always the best option, I think that's another debate on its own. But then the truth is they are associated risks, right? When you borrow, there are associated risks. And of course, investments that are supposed to come out of it, and they're supposed to be then have key institutions that look after this and key legal frameworks. We have our legal expert on that here, Samantha, who maybe as we go along, she's just going to come in a bit. And then Dongo.
Voilà, merci. Je pense que si on parle du management de la dette, il faut passer en amont en fait. C'est-à-dire que voir un peu toutes les stratégies qui ont été développées, les orientations qui ont été définies pour un peu cadrer justement l'endettement des États.
Yeah.
Si je prends le cas du Sénégal, je pense qu'aujourd'hui on a une dynamique communautaire à travers l'UEMOA qui définit un peu les cadres en termes de transparence et de responsabilité dans les finances publiques.
Yeah.
Et également, au sein de chaque pays maintenant, chaque pays est appelé à définir une stratégie de gestion de la dette sur 3 ans, 5 ans,
Yeah.
où on peut définir les orientations en termes de gestion de la dette. Maintenant, viennent maintenant les procédures maintenant en termes d'endettement.
Yeah, thank you. Very important one. In terms of the legal frameworks at the regional and at the national level, you know, on how to actually be able to then manage the risk associated with that. And he mentioned the legal frameworks, which I think in this session, we just want to run down very quickly, since we're also running out of time, so that we can have an idea on how it is structured. First of all, there are supranational arrangements, you know, that are associated with how we manage our debt, because there are international conventions and treaties. Because we are part of the IMF, we are part of the World Bank, right? We have signed up to these arrangements, and there are supranational arrangements, and they influence how we manage our debt. And then you have the Constitution, how every country is structured, right? How every country is structured is defined by the Constitution, which then further has, you know, further influence on how the institutions, right, are arranged to make sure that, you know, the governments are able to, you know, to manage their debts, the shared responsibilities associated with that, you know, the rights and the responsibilities, you know, associated with that. And then there are primary legislation like the public finance management legislation, and then We have dedicated legislation, which means now are actually just dedicated to that. Some of them are not dedicated to that. For instance, the Constitution gives that overall framework, but does not actually have, or does not actually define the specifics when it comes to issues of debt management. But below that, we also have secondary legislation, which are mostly regulations. But I want us then just to open this up. As per maybe how debt is managed in our various contexts, right? How that is managed in our various contexts, how the key instruments, do we actually associate it with that hierarchical, frameworks, starting from the regional through the constitutional, like Ndongo said, right? We have the regional arrangements, and even today we are pushing for a coordinated African approach to this, which I think is still a long way to go, because we need to get to the point of, we talked about convergence in the morning, for us to be able to manage that. But when we look at that hierarchical structure, does debt management in our countries, does it reflect that hierarchical arrangements, or what are the specifics, so that we can just also have a very quick comments, based on the various country experiences when it comes to the institutional frameworks governing debt? The same?
Of Uganda, when it comes to public debt management, there is a framework on public debt management. So at the end of last year, it expired in 2022-23, and we were supposed to revise it. So it just shows the guidelines to borrowing and who is responsible to borrow and why do we borrow, like people mentioned. So this should be in line with the IAMO protocol. Yes. Well, are the various indicators of public debt aligned to like having Uganda meet the macroeconomic convergence like it is required in the IAMO protocol? So at the regional level, I think this has been met. Yeah. But also, there are those principles of borrowing that are required by the IMF and World Bank. Yes, so usually before the framework is passed, government has an opportunity to meet the key financial institutions to have a look at the framework on whether the various thresholds are in line with what they're advising. Yes.
And that is even where my concern was going to come before we wrap up with this, right, was to ask how aligned are this national framework, or how aligned is debt management to these frameworks, actually? Because those frameworks are another thing. For some countries, you might find that they're actually moving away from what the frameworks say, or that is not properly respected or not respected to the letter. So maybe the concern now is how aligned are they, and then we can now come to this, to see like how do we actually, what are the accountability challenges, how do we actualize them? Because when we do a lot of civil society advocacy, it's been a lot prescriptive, and the concern is how do we then move to the next frontier when it comes to this? Like, not just prescribing accountability, but actually pushing for it to work, right? So I'm sure that is where we are at this point before we get to close. For us to be able to interpret this diagram, associate it with whether debt management in our country is aligned with the frameworks in place. And the other important question is, where are we, right? In terms of accountability, where are we? Are we at a point where actually we are able to push for it? And if we are at a point where we are facing challenges, what is the next thing that we need to do, right, to get to that next frontier, that we desire in terms of actually actualizing accountability? Samantha?
Thank you, Theo. So in terms of alignment, usually we note non-alignment, especially looking inwardly into our own countries. When you look at your constitution, when you look at your statutory instruments on debt, I'll give an example of Zimbabwe. Zimbabwe's constitution will tell you that the Minister of Finance is supposed to consult and talk to Parliament and get Parliament's approval when they then seek debt from the creditors, right? And it's the same thing in most African countries. There needs to be parliamentary approval before you contract debt. But you'll find instances where the Minister of Finance will contract debt on behalf of the nation, but without parliamentary approval. And that's already a non-alignment. You'll find, look at the statutory instrument, for example, your Public Debt Management Act. It will tell you that we should not exceed, it should be, for Zimbabwe, it should be 70% of the GDP, but you'll find we are above 70%, and we're actually in contradiction to the regional instruments now, because on the SADC level, we should not exceed 60%, and already in our own countries, we're saying, in our own country, we're saying 60%, and we're even above that. So there's that contradiction, misalignment that usually happens where the country's legal framework on debt itself is contradictory, and it's also contradictory to regional and also international instruments. So it's the same issue in most countries, just depending on what your legal framework says. And another challenge with the legal frameworks in different countries is you'll find the public debt management provisions are not explicitly set out. You'll find, for example, in Zimbabwe, we do have the Public Debt Management Act, but in other countries, they do not have an act that is specifically dedicated to talk about public debt issues. And that then leaves room for the flaws in terms of accountability, in terms of transparency, because you do not have a single framework that you can go to and see what transparency and accountability measures are supposed to be in place in the first instance.
Thank you so much, Samantha, for that. Yeah, I think it's a challenge. I don't know if there's another country, 2-3 country experiences. I'll take first Chad, which is one of the countries before I come to you, Beta.
Ok, d'accord. Donc, moi, je prends le cas du Tchad. Dans notre constitution, on n'est pas obligé de passer devant le Parlement pour approuver l'obtention d'une dette ou non. Donc, c'est le ministère des Finances qui se charge de signer les conventions pour les dettes intérieures. Par contre, on a le ministère du Plan et de l'Économie qui s'occupe plutôt des négociations et de la contraction des dettes extérieures. Par contre, il y a un comité national qui existe, qui doit d'abord étudier cette dette et qui donne son avis pour la signature d'un accord de dette ou non. Malheureusement, comme il n'y a pas de loi spécifique qui force en fait l'État à pouvoir passer devant cette commission, il y a des dettes qui sont contractées à l'insu au fait de cette commission nationale. Okay. Par contre, le Tchad fait partie de la CEMAC, donc il y a quand même des directives de la CEMAC qui encadrent un tout petit peu les signatures des accords de dette et tout ça. C'est ça qui recadre un tout petit peu certains accords de dette. Mais malheureusement, il n'y a pas vraiment de cadre légal qui peut contraindre l'État à aller devant le Parlement pour pouvoir, ou bien pour être bloqué pour un accord de dette.
Okay, thank you so much. I think a very big gap there that needs to be addressed for Chad. Yeah, Mr.
Yes,
Beta, let's take Beta first.
No, take me first because I'm going to compliment. Yes, I'm going to compliment what she just said.
Okay, yeah, because it's also CEMAC.
Yeah. She's right because CEMAC countries have this issue of non-alignment, as she's indicating for Chad. But the CEMAC has a very clean and clear framework. And she mentioned the committee, the National Debt Committee. That committee is compulsory for CEMAC countries to have. And that committee is supposed to have all stakeholders within the committee, including even the civil society. But where the non-alignment makes problem is that some of the committees in some countries do not include all the stakeholders that are indicated in the CEMAC Act. So the work that we need to do, because you were asking what should we do to get to something in terms of advocacy. Yes, the kind of engagement that we need to have is to make sure that we read those regional acts and make sure that where there's a committee which is mentioning that this or this group should be represented, they are really represented. And if there is a group missing, like let's say in the case of Cameroon, for instance, you have that same committee, but the civil society is not well represented in that committee. It's not even represented. The kind of advocacy we need to do now is to push the government to align with that CEMAC Act so that the civil society is well represented in the committee. Even the parliament is not well represented in the committee, because she was mentioning the case in Chad saying that the parliament does not necessarily validate or approve. It is because the CEMAC Act gives the path through which the parliament can start working to approve or not approving. So the work we should do is we read those acts and we make sure that what is prescribed in the act is really implemented.
Okay. Non-alignment thus far, better?
Thank you, Theo, and all speakers. Yes, so complementing to what Samantha has said, no difference per se, as per the case of Malawi. We do have the general law, which is not date specific. This is the public finance management law. And then issues of date are just rubber stamped in a way, such that even though in the public finance management law talks about 28 days of debt bills scrutiny by parliamentarians, that is not the case on the law. Rather, in practice. So there is total non-compliance, as my colleagues have said. And much more that we only do have what we call the medium-term debt strategy, which keeps on being reviewed now and then without total compliance to it. It will end, it will expire, they will review. And one such provisions in the strategy are issues like borrow to invest, but we see government borrowing to actually pay salaries, pension, and what have you. So I just wanted to concur with Samantha that there is no critical law that can govern these issues. And the cementing on the solutions, I think what my colleague had said, that the issue of CSO and representation in the critical spaces remains a big challenge and has to be worked on.
Thank you.
Thank you.
Okay, I will give Honorable a chance to speak, and then I'll just want us to comment if we understand this before we close. Right? Honorable.
Thank you, Theo.
Mukasiri, please keep an eye. I really want you to tell me if there's any sense there.
Thank you, Theo. I think for me, the disjuncture is between the loans. Once a loan has been taken and it was specified for a purpose, another loan can be taken for the same purpose. It happened in South Africa during COVID. We took a loan from the IMF. We started with the BRICS Bank, the NDP. Then we took a loan from the IMF and then from the World Bank, almost for the same reasons, within a span of 7-8 months. So I think there's no accountability or transparency for the public to know once a loan was taken, is it used for that purpose, and have the funds been exhausted before a loan can be taken along the same lines for the same reason.
Thank you so much, Honorable, for that. And I think it happens in every country. I think if Mr. Martin, I've heard of that happen in Cameroon, where several loans have been incurred for the same project, right? And then at the end of the day, even after the second loan, you're still having a very big loan without the infrastructure, on the other hand. And I think this comes to issues of challenges of accountability and how to make it work. And I'm just opening up. I just need 2 or 3 interpretations of what is here. Maybe Mukasiri, you start. What this means, right? If it makes any sense.
Let me see if it makes dollars. I don't care about cents. Yeah, I mean, from a macro level, I think it does, because the control environment matters. There are some governance indicators that really, whether it's about debt or anything else, but these governance indicators show the level of accountability. This cannot be isolated just to debt alone. So we need a broader framework that gives us confidence that our government can be accountable, and that becomes the environment which really matters. Then the second one, then once you create that enabling environment, obviously you've given a goodwill for institutions to operate, in my view. Maybe the third one is where we can debate, because the role of citizens must be there. Because for accountability, the demand, we can talk about this. I see the first and the second mostly from a supply-driven perspective. But as we go up, that top there, I see it also as a means of demand. To what extent are citizens active in making sure that whatever currency that is there for accountability, it does not depreciate or gains value?
Thank you. Thank you for that. It's called accountability pyramid, open for interpretation. Thanks for that interpretation, Bukasiri. Is there another try? Men are winning. Although the ladies won in the first phase, though.
Okay.
Yeah.
Well, I think at the micro level, for instance, in our country, there are laws. We have a robust debt management office that shows clearly the debts that have been contracted and what they have been used for. So apart from that, we also have Fiscal Responsibility Act, which prescribes the percentage of debt. For instance, our public debt is not supposed to, it has a threshold of maximum of 40%. It shouldn't go beyond 40%, even though those laws are being violated. And then for borrowing, there is also a law that external debt is 40%, while domestic debt is 60%. And then another law that those debts, public debts, must be borrowed to fund infrastructure and human development. But what we see is that adherence to these laws is lacking, because sometimes you see borrowing to pay salaries or for consumption. So that enabling environment to ask questions, the enabling environment to ask questions, like the National Assembly that has National Assembly committees for debts. There are committees that oversight debts, contractual and management. They are now part of the government. They are not oversighting the government. So that environment is not there. And for us CSOs, creating the enabling environment, like when we are going around, especially during the SDR issue, you see that most of the senators don't know when SDR was allocated, and most of them don't even know how much was allocated. So that kind of environment is not there. And then the central bank governor, you see that it's antagonistic. It's not creating an enabling environment for civil society to engage in terms of knowing how it's managing public debts that are in his name.
Thank you. I think that was trying to tie this with your country experience itself, but I think I've already taken a good part of your break time, of your lunch time, but just to go with what Mukasiri said, and what you also you complemented that, trying to explain what's happening in Nigeria, is the fact that we need to get all these 3 steps right? I'm sure somewhere we are stuck. If you see here, we're stuck somewhere here, where we have the laws, the policy frameworks are in place. If you go to any country, there is what the law says. But we already talked about issues of misalignment already, which means there is something that is required then to then align, which is to have this macro level enabling environment, right? No. Here is the enabling environment, the institutions, and then here are the propositions and actionable steps for executing laws and policies, which means this is actually where we are, or the next phase where we are, because it doesn't just suffice to be stuck here with these institutions, right? We need to push governments to work. We need to push governments to moving towards the alignment that, you know, that was a key concern in the comments that we had just a while ago. So the issue then is getting to this frontier is very important. And how do we do that is the multi-million-dollar question, and part of it, of course, which I think we will also be unpacking that within the week. And some of the comments that are going to come up is for us then to see how we can then make that happen. And then also aligning with what Mukasiri said, like when he said we are not compelled, or we can reject to pay in a dollar. But how do we start doing that, right? Those are the critical questions that we actually need to move from where we are at the moment, you know, to the next stage where we are able to push for such measures, you know, to be a reality, to come to fruition. So I will be sharing a lot of material on this so that we can also look through and be able to then understand, you know, some of these issues about debt. When we hear about debt, we just hear about the figures countries are owing, but there is a lot of mechanics, right, involved at the background, which I think it's also important for us then as civil society actors to understand these mechanics so that we can be in a better position, you know, to hold governments accountable, to demand for accountability, and to do our work, you know, properly as civil society actors. So thank you so much for your patience. I've taken a lot of your break time, but I beat you. You are going to have a great one before we come back for the last session of the day. Thank you. John.
Yes, thanks a lot, Theo, for very wonderful but technical session. So, yes, I don't want to start between you and the lunch. So I think what we'll do, we'll break now and I think convene back at 2:30. So that means we'll finish our program to, I think, 4 p.m. because initially we were to close at 3:30. So let's try and be back.